These three cities will crash, but this one will boom. Now, on the surface, they're in the same country. They've got the same interest rates and have the same news headlines. But pop your head under the hood and you'll see they're at very different parts in the property cycle. And if you ignore that property cycle and buy in the wrong city at the wrong time, it could be a decade before your house price starts going up. But how do you know where house prices could go up and where they could flatline? Well, I'll start by explaining how to time the property market the right way. And once you know where each city sits within its property cycle, by the end of the video, you'll finally know the three cities that could crash and the one that could silently boom. Now, to understand which areas will crash and which ones will boom, we really need to understand the property clock. But what is that exactly?
So the property clock's kind of this concept that property prices, they don't move in a straight line. It'd be so good if they did. It'd make things so much easier to predict when you're modeling out your investments, but they don't. But over the long term, they generally go up, but along the way, there are kind of ups and downs. You might have, a period of time where they're completely flat, or you might have them going backwards, but then, they recover a little bit. So again, it kind of works in this cycle. And Ed doesn't really like the property clock because he thinks it's a bit too simplistic, don't you? And I guess that's because the market doesn't actually work like a clock, but it is a useful way of thinking about how the market's going to flow.
Well, I found that people really like the concept of it, even though I'm like, oh, yes, but, if there's a boom, the average boom lasts for about 6 years. The average downturn lasts about 4.5 years. So it's not like...
It's a clock you buy on the beaches of Thailand. It's fast in one area and slow in the other.
But putting all of that aside, how does the property clock actually work?
Okay, so if you think of the top of the clock, 12 o'clock, as the peak of the market and 6 o'clock as the bottom of the market, if the hand's moving from 12 to 6, then prices are on the way down, right? On the other hand, if they're moving from 6 to 12, prices are rising.
And so I suppose it's a seller's market when the property clock is kind of between 12 and 2 because prices are really high, and it's a buyer's market between 4 and probably 8 because prices are at their lower point.
Yeah, and kind of 12 to 3 and 6 to 9, you tend to be kind of flat, right?
Now, where would you say we are today as a whole country in New Zealand?
I reckon we're probably between an 8 and a 9 across the country. That would be my pick.
Okay, and why is that?
We've had a period of higher interest rates, lower momentum in the market, but it's kind of starting to change. Like I can feel it in my bones. Like, you're starting
in
to...
your waters and your bunions.
You can start to see a bit of momentum. It's not there yet, but it's certainly starting to feel that way.
Well, if you think about 2021, we would have been at 12 o'clock.
Yep.
That would have been house prices going through the roof. It feels like it's never going to slow down. Now, nearing the end of 2021, we would have been heading closer to that 1 o'clock because property prices, they just started to come down. The Reserve Bank raised interest rates to cool the market. We went through around to about that 3 o'clock where we had tradespeople readily available. There were lots and lots of developers closing down because there weren't enough people wanting to buy their houses. Property prices start to fall. And we started to see this period, which we're seeing the sign a little bit even now, where rental vacancies are a little on the high side. It's a bit harder to find a tenant. And the interesting thing about a property clock is it's not just about having a guess of where it is. There are some of these signs around the cycle that tell you what time you're at. So if you're in a period around that 8 o'clock, for instance, we would expect to see housing levels tighten a little bit. We'd start to see some of the supply that's built up start to clear out from that extra demand, and would expect to see a lower rental vacancy. So good tenants pretty easy to find.
So where do you see it?
I see us as a country actually about 7 o'clock now.
So a little bit further back than...
That's what I would see. But what is really important to understand is that each region in New Zealand is going to be at a different part of the property clock. And we were thinking about this idea of which areas are going to quote unquote crash or not perform particularly well in 2026 and which ones are going to do well. You would expect to see that a region that is further on in its property cycle, say around 8 to 9 o'clock, which some are, you'd expect those to do better in 2026 compared to those a little bit earlier in their cycle, say around 5 o'clock. And so what I've been wanting to do for a wee while is create a live data-based property clock. And so what I've got in the screen in front of you, Andrew, is all of the different regions in New Zealand with where I feel they are in their property clock based on data. If I think about a region that's much further on in its property cycle, Southland. I reckon Southland is about a 9 o'clock, but it's a pretty weak 9 o'clock as well. We're seeing prices rising there, but we're not seeing masses of sales right now. It's kind of about average. So we'll see if that kind of mini boom piece is out there. Whereas an area like Canterbury, I see the Canterbury region much, much further along within its property cycle, closer to, I'd probably say, the 8 o'clock rather than 9 o'clock there. But we're seeing sales lifting there much higher than average, and we're starting to see pricing start to pick up there a little bit. But where are some other cities currently sitting within their cycle?
So I think if we're thinking about some of those ones that are a little bit further back, you kind of got the Waikato that's kind of around that kind of 7. Otago, interestingly enough, you've got that kind of at about 7 o'clock. I kind of wonder if it's a bit further along.
Okay, interesting.
That's just my thoughts.
Well, put together your own database property clock then. How about you go to university, do the economics papers, and then you can put together your own property clock.
It's much easier just to employ a nerd like you. But, if we think about places like before the break, we were talking about Palmerston North and how that's a good place to invest. Now, that's where, you got to kind of wonder what kind of investor you are. And Ed and I, we're definitely both counter-cyclical investors. We're looking at places before everyone else wants to invest there. That's kind of our rationale. So sometimes the places we might recommend might not necessarily be the places that you think, yeah, I'm hearing that it's a good place to invest right now.
Well, that's why we've actually got Manawatu Wanganui. Even though we said that Palmerston North was our second best place to invest in New Zealand for 2026, we've actually got that region sitting at about a 5.30, like much earlier in its property cycle. But some of the other places we're really excited about was Auckland, and we've got one eye in Wellington. Now, if I look at my database property clock, we've got Auckland sitting around that 5 o'clock mark, pretty much the same with Wellington, much, much earlier in its property cycle. And so if I think about the places that will underperform in 2026, that won't do as well, it is Wellington region, Auckland region, Manawatu, so Palmerston North, which is funny because why are we saying that these places will crash or not do as well in 2026, but yet they're also our favourite places to invest? And for me, it just comes down to a very simple idea, which is when you're investing in property prices don't go up all of the time. So you want to get as much of the boom as you possibly can. You want to capture as much of that upswing as you can. Well, if you're already investing in, let's call it Southland, which we've said is about 9 o'clock, well, you've only got half the upswing left to go because you're already sitting at 9 o'clock. You've only got 3 hours to 12 o'clock. I would rather invest in an area that's sitting 5 o'clock, 6 o'clock. Then you can try and capture the entire upswing because that's where you're going to make most of your growth. And so it might seem like we're saying two different things in different videos. Actually, it's one whole picture, which is where you've got to kind of put everything we say and put it together. But if I do think about the areas that will do the best in 2026, Southland's got some strong momentum. So does Canterbury. Some of those areas that I expect will lag behind is going to be Auckland, Wellington, and Manawatu Wanganui. But I also think that's why there's some opportunity there as well.
And it's funny because sometimes having this kind of data can give you the confidence to invest in an area where someone might tell you that's a bad idea right now. So in fact, over the break, I bumped into someone and they follow our data and make investment decisions based on that. And they've been quite successful over the long term, but over the short term, you might not get as good a results as someone that might be investing in one of those areas that is further along a cycle and higher up in the property clock.
Well, that's where you've got to decide, what are you measuring your returns over? Is it over 12 months? If you only care about the next 12 months, well, that's where Southland, Canterbury, I'd feel a bit more comfortable with. If you're thinking about the next 10, 15, 20 years, that's where I'd be more comfortable with somewhere like an Auckland, Wellington, or Palmerston North, even though, over the next couple of years, I still think that especially Wellington will probably underperform the rest of the country. you've got to remember with Wellington, they had two big property booms in a row, starting from 2015, 2016 through to 2020. Then COVID came along. They had another boom. You can't expect to have a double banger boom, a massive downturn, and then all of a sudden to go back into another boom. That's unlikely to happen. You'd expect house prices to stagnate there for a little while. But if you're finding this kind of data useful, make sure you hit the like button, because that's how Andrew and I know which videos we should do more of. And honestly, it just helps with the YouTube algorithm. Subscribing, that really helps too. That way you're going to get more videos like this to help you build your property portfolio. But what do you think, Andrew, is the main lesson from this episode?
Well, I think the main thing is that property prices don't go round in a circle. So this is why Ed doesn't like the clock. They often tend to rise over the long term, but property prices are cyclical. And yeah, I guess a clock is kind of a bit like a cyclical pattern. And so, it's not exactly going to be as perfect as a clock.
Well, I suppose the other thing is, like, if you're sitting there at 7 o'clock in the afternoon, or in the evening rather, in an hour, it's going to be 8 o'clock. But it's not like in the property clock that it's like, okay, we're at 7, so give it another year, we're going to be at 8. Give it another year, we're going to be at 9. No, you can go backwards as well. You might go from a 7 o'clock back to a 5 o'clock if there's a double dip downturn.
Daylight saving. But it is kind of it's a good guide to kind of see, okay, what are those early indicators that it might be the right time to start considering an area that maybe other people aren't thinking about investing in right now.
But I do think it can also give people confidence that if things aren't going right now, you can say, cool, my region is at 6 o'clock, so I've put Taranaki at 6 o'clock at the moment. Okay, it's probably not going to be like this forever. Eventually there will be another cycle. And I do want to emphasize that idea again, that some phases are longer or shorter. It isn't clockwork. So a full property cycle does take about 10 years. The boom phase typically takes about 6 years. A downturn, falling prices, typically takes about 1.5 years. The recovery, where property prices are pretty much flat going sideways, typically takes around about 2.5 years. But I've seen times where, like Gisborne, for instance, it was sitting at 7 o'clock for around about 12 years.
Yeah, Wellington, about 8 years, I think, last time as well. Sometimes you do have these longer periods of time where it might be flat.
So now you know which cities are likely to stumble and which could run ahead over the next year. And I've taken all of the number crunching I used in this video to create this list of the top 6 places to invest in right now. And you'll learn what those 6 areas are in the next video. Click the video on your screen to watch it now.